Then there is a breaking coming in right now, which is about this CPI data that's coming in. So, as we all know that in July we saw a 15-month high figure 7.44, and well below that the August CPI has come down to 6.83%, which is a welcome figure. Anything below 7% was really good, which a lot of experts were expecting. Also, the July IIP data has come in. The numbers have come down to 5.7%, and talking about rural CPI, the number has come down to 7.02% versus 7.63%. Clearly, slight fall in vegetable prices has led to this, but then talking about the RBI comfort zone, 2 to 6% is still slightly above that. But then let's analyze this number. I have our panelists with us, DK Joshi, Chief Economist, CRISIL. I have Madan Sabnavis, Chief Economist, Bank of Baroda, and I have Radhika Rao, Senior Economist, Executive Director, DBS Bank. Good evening and welcome all three of you. Radhika, I'll come to you first. Welcome number, what would you say?
Certainly, I think 7.4 was very high in the previous month, and I think now what we have seen is the food-related spike has essentially moderated. In fact, I think the retail prices that were out earlier for food did seems to show a bit of stickiness, but I think when it's translated into the food prices, because we only about 22 food segments are available on a high frequency basis. But when in the CPI index in general, you've seen that it's a very moderate rise on the month. So certainly a welcome sign. Essentially, it shows that the administrative measures that have been put in place are working, essentially ensuring higher supply into interstate supplies are sorted, and you've also seen things like stepping up imports, some of the export bans that have been kicked in. All of that seems to be having a positive effect on the domestic prices. So I think that has helped to bring inflation down to about 6.8%, which is a bit below our own forecast. And I think going forward, just as the authorities expect, we do think it will correct some more, because usually the supply-led shock, especially in vegetables, tends to moderate towards the end as the harvests arrive. And I think we should take that into consideration in September and October prints. Anyway, as of now, I think the inflation is still higher than the RBI's target. But I don't necessarily think that they would act on it. I think they will continue to flag the point that vegetable it peaked. It's now off highs. Even non-food costs are going to get a hand because LPG prices were cut. Core is anyway lower than 5% according to our own calculation. So all of this will gel with the overall framework that inflation should continue to ease from here on. But we should remember that even if you see in the region across some of the other Southeast Asian countries, inflation prints are bottoming out. It saw a large correction. After that, it's bottoming out, which essentially means for the broader regional central bank push as well, that most of the central banks are likely to stay on hold, and with an eye on what the external drivers are going to do, including the Fed. So even for the RBI, we do think they will take comfort from this softer print and flag the possibility more is coming. And essentially not move on the policy for the time being.
Right. Mr. Joshi, also the core inflation number has come down to 4.8% from 4.9%, the number that RBI really tracks closely, okay? So that's a relief over here. And also talking about the rural inflation, that has come down to 7.02%. And food inflation, which was, there was a fear of it coming into double digit, but that has cooled down to 9.94% as compared to 11.5%. So clearly a relief. And how do you think the MPC also would be taking these numbers? Because that's the whole concern. The core number, Mr. Joshi, the core number although has come down to 4.8%. Your take, Mr. Joshi?
Well, I think the hump in inflation that we saw in July and also to some extent in the August data was largely food-led, and within that vegetable-led, and everybody knows that vegetable price cycles are short in nature and they correct themselves. So in August, what we saw was the first part of August still saw high vegetable inflation, but in the latter half it came down quite sharply, and that's what got reflected in lower food inflation. We were actually expecting double-digit food inflation, and it actually came in much lower than that. That's why I think the overall inflation is somewhat lower than what we had expected. Now, the way central bank would look at it is, I think they typically can look through vegetable inflation, and I believe that in the coming policy, we'll see the status quo on the rates and also on the stance. But if there is another element of food, which I think is still sticky in nature, which is the food grain part, the non-vegetable part, which is cereals and pulses, where monsoons also come into play. And there, I think we need to watch the space carefully, because if food inflation stays sticky, and I think it stays high for longer, then there is always a risk of it spilling over to the other parts of the other components of inflation. I think that is why I think still I would say that the central bank will remain cautious on the communication front, and I think in September, I think you'll see further decline in inflation, because, as I said, I think in the second half of August, the vegetable inflation had started coming down pretty sharply, and in September, I think the decline will be even sharper, and that should bring down inflation closer to 6%, I think, in the month of September. And so I think that's the view we have, and I agree with Radhika that I think central banks in Asia in generally are breathing easy, because of lower inflation pressure vis-a-vis. So we probably will see interest rates being held at these levels. We may not cut interest rates before the beginning of the next fiscal, but I think there's I don't see central bank raising interest rates, I think, in response to what we have seen in terms of inflation.
Okay. Madan, what about the sharp rise in crude oil prices, that has added worries about inflation? We've seen Brent, trading above $90 per barrel due to supply concerns. Also the kind of monsoon we've been witnessing, where there is complete impact of El Nino. Although so far the policy might have status quo, but then these impact on inflation and the numbers in coming months?
Yeah, I think the crude oil price going up is a concern, more from the point of view of the WPI. But we should remember that as far as the CPI is concerned, the prices are still very much administered at the consumer end. So therefore, it's reasonable to expect that in a pre-election year, there will not be any tendency to increase the consumer price. In fact, if you looked at the LPG cut in price of 200 rupees per cylinder, I think that has helped to assuage inflation coming from the fuel side. So I don't think this would be a major concern from the point of view of the CPI inflation number. To that extent, I think that will not really cause worry for the central bank. But definitely in terms of WPI, where the price is more going to be driven by what happens in the international market, there would be a tendency for that to get affected. Now, this said, I think as what Dharmakirti has mentioned, I think the major concern today, forget about the statistical part of the inflation number coming down, and probably maybe that 6% or go lower in the next month. But I think the area sown under the Kharif crops is a bit worrisome, because when you look at pulses, I think there has been a shortfall out there. There is some news that the rice crop in the northwestern area could have gotten affected on account of excess rains. So I think cereals and pulses inflation is something which will continue to nag us. So statistically, we may be in a fair enough position, but I think we'll get a clearer picture about the harvest as well as the prices once the Kharif harvest really comes in. And we should remember one thing, and markets are normally forward-looking. So if you see what's happening in the cereals market and the pulses market, even though we have fairly good stocks available, the prices have continued to remain firm, primarily on account of the fact that there are expectations of certain shortages, especially for pulses in this particular season, and that's going to carry on for the rest of the year.